So over the last week, obviously the focus of the channel, we've been talking a lot about what's happening in the banks and overall in the market and how that's affecting us. Now, when we look at where we're at, we've kind of neglected the technicals. Okay, I will say that. Now, overall, I've tried to be as unbiased as possible. I've tried to give you the viewpoints of technicals and the news. Now, I'm going to cover news first, and I'll come into the technicals. So if you want, you can just skip ahead if you want. But let's dive really quick into this. Now, we've had a few different things being said and talked about. And in my opinion, what's really bolstering and boosting the market up right now is this idea of a bailout. If we've looked at every time news has come out around and about the bailout, we've seen a shot back to the upside on the charts. You can go look at when these articles are released and then just look at a chart. And within 10 minutes of that time, you've seen the action happening. Now, if we look at ultimately on the market, really quick, we're going to come back to this fundamental news here. When we get to the market and we look at the 4 hour, and let's not even look at ES, let's look at Nasdaq. What has really taken us from up here around 12.8 down to lows of 11.8 prior to the bank news, right? So even before the bank news, we were already down here at 11.8, right? It's just a fact of the matter, right? The 10th, what was the 10th? Let me make sure really quick. The 10th was on Friday. So before the bank news, we were actually right here at 12.1. And then before that, when we had the PAL talking before Congress, the Senate, everything, you dropped down to 11.8 the first time. So that's where we were before that news. Then the bank news gets released and we drop from 12.3 all the way down to, new local lows of around 11.6, 11.7. That being said, my question around the market is what started bringing us down from the highs of 12.9? It was the idea that inflation hadn't dropped. And if we look at core CPI and everything around that, it's kind of pointed to that same overall reaction. Now that being said, PPI was really good. PPI did perform better than expectations. But what does the Fed continue to say? The most important aspects are going to be PCE, then CPI, then PPI. And then on top of that, the jobs. Jobs are very important because wage growth continues to go up and then inflation is also following that as well. And that's kind of where we're at. So the Fed has really focused on two things, and it's not even CPI, which again is staying where it's at. It's jobs and PCE. That's what they say is the most important right now, is getting the unemployment number up a little bit and then also getting PCE gradually to go down. Now, since then, making my point there, what's the news that's pushing you up here? Specifically, yesterday into today. You had a really nice push here on Nasdaq today. It's this. This is the news. It's the idea of a bailout around Credit Suisse, FRC, which FRC it hasn't been headlined as a crash yet or someone that needs a quote unquote bailout, but we're getting massive banks as far as JP Morgan, Morgan Stanley, they're all teaming up like the Avengers, if you will, and injecting cash into these banks to make sure they can continue to do business. Like we said in yesterday's video, they realized who this is going to hurt. It's not going to hurt you. It's not going to hurt me. It's going to hurt them. It's going to hurt the big banks. Those are the people at risk right now. And that's what's happening there. Now, if you are on the backside of it, you're like, okay, well, Tyler, I don't want to jump down conclusion lane. And we don't have to. I don't like to. I like to look at facts. Now, the fact of the matter is the people trying to protect themselves, the people that do this, they were selling 12 million. They were selling millions of dollars worth of stock ahead of this crash that was happening. It's almost like they saw it. And you know what? You know what's the cool thing about this? This is posted on my Twitter. I retweeted it earlier. This is what they said about that, just so you know. Bank insider sales were exempt from normal disclosure rules. Executives sold 12 million shares while stock was above 120. No harm, no foul. You guys, you're fine. Even though you knew your bad trade, even though you didn't disclose this to anyone, you're exempt, right? Very interesting behavior in what we're seeing here. And it's a slippery slope. So while the Fed and the Treasury, primarily the Treasury, continues to say our banking system is in great hands and there's nothing to worry about, it's interesting as we look at this, they're still getting bailed out. It leads you to say there's probably something going on here. So going back into this, what's pushing us up here? The idea of a bailout. And what's also stemmed from the bailout, it's from yesterday's picture that we showed you of Fed fund futures, that you have 2 more rate hikes followed by even a pause. You have a pause and some more rate hikes, and then they're just going to start cutting. They're not going to leave rates where they're at, right? That's the idea of what's pushing you up right now. Now, I urge you to think for yourself. This is not financial advice. Do your own DD. I always say that. But I urge you to just play devil's advocate with yourself. Is this actually bullish information? And for anyone asking about my positions, I still have my Tesla position. It's for May, so I'm sitting fine on that. I had some packed W puts. I made about 90% on those on the day as well. I left a few runners, but just to give you guys a visual, this trade, I can bring it up in like a day or two because it takes a little bit to go to my trade zealot in my journal. But pack W hit 195, got in yesterday right here at 10:53 at, where was it? 105 to 110. So about 80% give or take on that position in less than 24 hours. And that's one of those banks, right? And pack W is another bank that's getting a liquidity injection, so you know. So when we look at what's happening, that's what's pushing our market up. It's this. That's ultimately what it is. Okay. What about ES? What about Dow? Where are those guys at? Now, ES had a good day. Don't get me wrong. This is like the 4-hour chart. So on the day, fantastic. You're above the 200 SMA. You look good. Solid day. But in reality, if we just zoom out really quick and go to something like really quick here to the daily, you're still structurally in that downtrend. Can we agree on that? We're still here. Nasdaq, slightly breaking out of it, slightly making that move out of this. Actually, no, sorry, it's already out of it. For some reason, the chart's not loading, but you're like way up here on Nasdaq. You've already broken out of it, which I thought. I was kind of confused by that. See, there it goes. Going into Dow, and you're going to see the disconnect here in a second. Dow, very weak, very weak. So when we look at this, my question is this a bull trap? Is this possibly a bull trap? And I continue to say the same thing. Proceed with caution. That is the biggest thing that I can urge everyone here to do right now. If you do not proceed with caution, I think a lot of people will be at risk with overextending themselves and trying to FOMO into some of these calls and to play the upside potential. Okay, I'm not buying it yet. That being said, I have missed out on money. I have missed out on money-making opportunities here. If we look at some of these big names like NVIDIA, great run, AMD, great run, Meta, I liked them like a week ago. I just didn't want to go long. Great run. They're all pushing. Tech is going crazy. Banks, everything else is like, pause, timeout. We don't look that good. So that's the concern for me right now. Okay, that's where I have to be pretty concerned. Today's video is gonna be pretty short. Now, before we go into anything else, and I forgot to do this earlier in the video, consider liking and subscribing. Every single day we make videos here on the channel. I try to be as unbiased as possible. I post the winners and I post the losers. Right now on my trade with Tesla, let me bring it up real quick so I can have it. I don't have a screenshot, so I can actually show you guys really quick. And I like to be transparent with you, right? So this is unrealized, just so you know. So it shows I'm down 2,300, but that's just from where I was yesterday. So the way Interactive Brokers does it is it calculates where you were yesterday if you were in profits, and then it actually shows that as your losses the next day. So if I was up at 500 yesterday and then my net position is down 1,000 a day from my initial entry, I'll be down 1,500, right? Because it adds up together. So right there, that position is only down about, like, I believe less than 1,000. But I was just up so much yesterday. So that's the thing right there, because remember, Tesla had a really big drop. So that's where I'm at on that position. But again, I like to promote transparency. I think that's one of the biggest things that we need to be doing in this space. And hopefully you guys get something out of this channel. Consider liking, consider subscribing. We're gonna get back to it. Now, looking at volume, this is another big thing here for me. I'm gonna refresh this so you can see. This is your SPY volume. Interesting enough, on the most bullish day that we've had here on SPY, again on ES, I'm not making this up. This is just what's out there. We've talked about how you've been range trading with this volume, with your highest volume. Being said, though, you are pushing up really nice, but your biggest push here to the upside was followed by your least amount of volume at 128. Now, that being said, again, I'm going to highlight and say this. You still are moving with great volume. Your average SPY volume for the past 30 days has been around 80 million, and now it's almost pushed up to like 90 million. So this is a great push, great volume. I'm not going to lie, this is still good. But that being said, of the past 5 trading days, roughly, this is your least amount of volume. Interesting enough to see. It's almost like people weren't buying into this hype and into this push. A little bit deeper, we're going to look at some of this chain coming in here. I want to look at VIX really quick. Actually, we'll come back to VIX. SPY. A lot of SPY calls coming in here today. We saw some of these coming in yesterday as well. Qs a little bit mixed. Not as many calls. We had a lot more calls yesterday coming in here. Going into VIX. You're seeing calls, a little bit of puts coming in here as well. That's very short dated, and I want to mind you that. SPX definitely split here. Some bigger positions very dated for September. Short dated positions are still towards the downside. Remember, short dated is what I'm really interested in. I'm not as interested in the dated positions because we want to know what's happening right now. And the shorter dated, the more aggressive and risky those typically are. That's how I generally take it. So that's what I'm looking at there. So when we look at that chain, a very interesting behavior there as well. Looking at what's happening here on Bookmap, their link is down below to give you a visual of what's happening here on level 2 data. Now you can still see there's still been a grind to the upside. Beginning of the day around 9 o'clock, very easy, very just straight push. But after that, and again, you can notice where all that volume is pushing in all through the day based on news, but it was walls and walls and walls, and sellers were still setting up. So there was still a battle, but you were still pushing up. If we remember when we were dropping, was there any buyers trying to hold you up? No. So this still shows me that people are still getting into short positions. In my opinion, people are still hitting the sell button. People are still trying to play that downside, which I do believe going into the Fed meeting next week that we will have downside with a new Fed rate hike of 0.25 most likely. That's where I stand. Just remember and think about, a week ago, we were expecting a 0.5 hike. Now we're expecting no hikes and rate cuts coming very soon. There's a disconnect between the realities here. If you also look at what happened in London today, they hiked by 0.5, even though Credit Suisse, which is a much larger bank than what's collapsing here in America, is absolutely failing right now. Okay, so we need to understand what's happening here and how this is all playing out. Okay, again, I'm not trying to be biased. I'm trying to show you every, vantage point of what's happening here in this trade. Now, again, today's video is not going to be super long, so I'm going to give you the last closing thoughts here. I'm just in a rush today. I had to get out of here. But still, right now, I still am looking at the downside. I'm holding my Tesla position. I still like it. If you get above 187, I'll probably end up cutting it because you will be breaking out of this kind of channel that you were in to the downside. If not, you're already breaking it now. But this is a major resistance right about here. And you can see that we're kind of getting rejected out of it as we speak. So I want to see a hold above 86, 87. Going into NQ, what am I looking at here? NQ, very interesting behavior. And it's just not loading out here, and I don't know why. There it goes. So there you can see it there. Very interesting behavior here. We still have our massive supply here at 12.8, 12.9. I would not be surprised to see NQ push up to 12.8, 12.9. I would not. Now, I don't think it's going to make a higher high. It could, but as we look here, I'm going to tell you we're in an interesting area. You can also see if we go to the 2 hour, how you operated in this region as well, where we're at right now. We kind of had a little bit of chop here, and I'm not going to call this a demand, but it's definitely a resistance. Basically 12.65 down to 12.6. Very interesting behavior there. So again, looking at this, you have upside to 12.8, 12.9. That's where I think we hit resistance again. That's where we rejected 1, 2, 3 times back in the mid-February, and that's ultimately what pushed us back down. If we look at what's happening right now, I believe you're setting yourself up for some pretty gnarly downside going into next week as well. We definitely have more room to go down. Giving you a visual, I'm just going to cheddar flow, or actually back over to TradingView. Giving you a visual though. Remember when we had the downside back in November and in December? A very interesting behavior that we had. So when we were down here, to all-time lows are really to, not all-time, 52-week lows or to bet to the downside, your trade opportunity was pretty lackluster, right? Because if you broke above highs, that was your trade. So it wasn't really that great. Like the odds, what you'd win compared to what you're risking weren't that great. But if we look now, look at where you're at. Look how much more room you have back down to those lows, okay? Just giving you some food for thought of where we're at. The trade kind of totally changes now. Say hypothetically you break above highs. The room all the way back down to those lows is pretty gnarly. And I'm not even going to say it's hypothetically your target. Maybe your target's just 11.4, whatever it may be. You still have a better trade now, right? That's why shorting back here wasn't as lucrative to where you're at now. But when we look at ES, you can definitely see there's still a lot of concerns here with where you're at. Right? You're not too far off from where we were back in December to when we had that downside slide and the risk reward there. So I definitely like how this is playing out. I think that tech is having a really nice run. It's really great. I'm not going to downplay it. As far as in the short term, I have been wrong. Air is clear. My trades have not been in the short term. So far, we haven't had the loss yet on the trade, and until we get out of it, and I'll post whatever I lose. I genuinely don't mind posting that. But again, Still sticking with the same trend, what I've been focusing on. I'm not going to change things up because there's a little bit of a twist and a surprise of what's happening here. If we're looking at the market, I still believe downside is upon us going into next week and into that Fed meeting. I don't believe there's going to be anything good said by the Fed. I encourage you to just sit back and say, what could the Fed say at this meeting that could bring the market up? What's one thing that they could say? I'll leave it at that. Comment down below what you think. I'll see you tomorrow.